Good morning, good afternoon, good evening, and welcome to the Wednesday, the 26th of October, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. Or I'm going to have to quickly jump off of this page, otherwise we're going to get the feedback loop coming in from the webinar. So let me get off of that page. Welcome, everyone. We're going to go through our usual regular run through in here today. We are going to take a look at the calendar, both the macro calendar and the micro calendar, and then we're going to take a look at the macro fundamental events, and we're also going to take a look at all of the potential macroeconomic events, macroeconomic articles from the major news wires, and also take a look at the charts to see where the potential trigger points are coming into today. Before we start, though, I do want to give you a heads up. We do have the Trader Mind. So if we go to Trader Education, you go in here today, guys, right? So look up here, Trader Education, okay? Trader Mind sessions, okay? You click on that. I'm going to open it in a new tab. Okay, so up here, Trader Education, okay, in the members area. So you log into the members area, Trader Education, Trader Mind sessions, and you come in here. And there we go. Okay. So it's going to broadcast live here. Okay. So this is where it'll be live. Please come in here. You can also ask questions in here. Okay. Pop it out into a chat. You can ask questions over here. And you can also then send in any questions beforehand. Send them to steve@tradeday.com, james@tradeday.com. If you have any questions, please do fire them in before the Trader Mind. So this is looking at some of the psychological aspects of trading. Anything you may be struggling with, we could address. So please do send those in. Put in the comment Trader Mind question in the subject bar would be helpful, so we can get to those questions beforehand. So Trader Mind session later today. Now remember that I'm going to get this right. 10 o'clock Central. 10 o'clock Central, 11 o'clock Eastern. That's 4 o'clock in the UK, 5 o'clock Central European time, okay? So 10 o'clock Central time. I don't know where that is, Pacific and Mountain time, right? 9 a.m. Mountain time, is that right? And 8 a.m. Not great at I think 8 a.m. 8 a.m. Pacific, 9 a.m. Mountain, 10 a.m. Central, 11 a.m. Eastern, 4 p.m. UK, 5 p.m. for most of Europe, okay? That's when we're going to be doing it today, the Trader Mind session. If you have any questions, send it to Steve or James, or look, ask us anything, tradeday.com, Trader Mind question in the subject bar if you can, okay? Remember, it's in here, Trader Education. Go to the members area, log in where you are now, Trader Education, drop down to Trader Mind sessions. That's where you're going to come to us, okay? You know the times. There's also on the site, okay, if you go to the chat and site activity page in here, we've also got it advertised in here. So I think it's not the top one. I will reshare it. Actually, I will put it back in here once we come off the webinar. But it is in here as well from 2 posts ago. I think here it is, Trader Mind session in here. So remember that, okay? So in there, okay? So, all right, guys, let's take a look at what we've got going on. Data-wise coming up, not too much on the actual data front. Retail inventories, new home sales. They've got it as a 3 bulls in here, on their category of our importance. It's never that one, right? Chicago time is 10 a.m. Yes, that's when we're on. Yeah, Central. Yeah, that's when we're on. And then we've got new home sales. They've got it as a 3. It's not not a market mover. Do have Bank of Canada today. Going to be interesting. We're looking for a 75 basis point hike from the Bank of Canada. Be interesting. They should deliver that, but we need to watch that because it could be a sign of either a more hawkish or a dovish shift in a central bank. Remember, a couple of meetings ago, we got the RBA, the Reserve Bank of Australia, less hawkish than the market had expected. We also get crude oil inventories later today, and that Bank of Canada press conference afterwards, 30 minutes later. An hour later. So you got 10 a.m. Eastern, we have the Bank of Canada statement, and then 11, we get the Bank of Canada press conference. In between those, we get the oil data as well. So keeping an eye on all of that for this afternoon. And then on the earnings side, we'll come back to what we had yesterday shortly. We've had, again, it's a really big week for earnings overall. And you can see in here, we've got, most of this in green today that we've had coming through. Boeing was a miss, though. Boeing's a worry, right? The reason Boeing is a worry is because it has a big impact on the Dow. Okay, so the S&P and the NASDAQ are are capitalized weighted indexes. That means that they're weighted by the index, by the size of the company. The index is weighted. So bigger companies have a bigger impact. That's normal, right? With the Dow is a price weighted index. So the bigger price, the bigger impact. Okay. And Boeing has a large relative price to its market cap. So it has a bigger impact on the Dow. And obviously, you've got some significant misses from Boeing in here this morning. So that's certainly a negative. And that would then have a more significant impact on today, going into the Dow Jones Industrial Average going into today. So the Dow is kind of unchanged today, but we've had a bigger decline overnight, obviously, for other reasons from the S&P and the NASDAQ, and I'll talk about those shortly in here. Okay, and we'll come to those. But going into today, really, a lot of these, these ones at the top half, remember, this is already sorted by market capitalization. So most of them in the top part of it have already reported. We've got the big one is after the bell, though, Meta, okay, aka Facebook, coming after the bell this evening. Okay, so we'll certainly be watching on that going forward. A lot of the big boys already have reported in here today, and mostly green, although Boeing is a standout as a red, and that does have a big impact on the Dow. But the real driving force from the last 24 hours. So we had a really decent day yesterday. Okay, really positive signals from a technical analysis basis on the charts. We took out some important resistance levels on the S&P. Talk about those shortly. Ones I've been flagging in my reports, and we've been flagging on these webinars. And the NASDAQ got very, very close to making similar positive technical signals. Didn't quite get through the resistance points. We'll look at those again shortly. However, the big kind of like negative was then after hours, we got quarterly updates from Microsoft and Alphabet/Google, which were very negative. Also, though, Texas Instruments, okay? Now, Texas Instruments is often seen as a bellwether for the semiconductor industry, okay? And Texas Instruments also negative in here. And if we go back to the earnings calendar, and I go back to yesterday, you can see in here, although Microsoft's top line numbers were in green here, the actual, if you dug deeper, the cloud services numbers were worse than expected. Google missed even on the top line numbers, and we go down to Texas Instruments. Even though the numbers are in green here, they missed on some of their other metrics. Okay, so all of them end up negative. All of them got dragged lower. I've got the percentages on here. No, I haven't got the percentages. But Nasdaq lost as much as 2.5% after that, right? Having been up about, what were we up yesterday? Actually, it's not going to be in here because they never show it, does it? No, I mean, we were up about 1.5%, 2%, and then overnight we're currently down 1.7. So we've given up all of yesterday's gains in here on the Nasdaq. So dragged down by those those tech misses. So not good. Okay, on the charts, it looks like a failure at the moment. And I put my reports out right on the bell before these were out, so didn't pick up on that. So I'm going into today bullish on the reports. Banks are still doing fairly well in here, given that we've had this sprint to higher yields, lower bond prices, and actually it's been good for bond markets, proved to be a boom for Deutsche Bank fixed exchange books. So a positive coming through from there. China's stock rally fizzled, and we've got a rebound. City of Wuhan locked down one of its central districts again in here. Stock swoon, so we've spoken about that already. Strong gains and then a significant sell-off yesterday after hours. And their data in here they're talking about is fairly light, but we do get Bank of Canada today. Okay. So, Taylor the Tape was Wall Street extends rally on signs of ebbing Fed rate hikes. So we spoke about this yesterday. Markets looking strong yesterday. And we looked at the Fed tool yesterday. We looked at the fact that the peaking rates now not going as high. We looked at the potential for rate cuts. And also we looked at yesterday, sorry, wrong tab. In here, although we're nailed on for the 75, we went to the next tab for the December meeting. It's kind of even Stevens now between a 50 and a 75. Okay, pretty much. Okay, so fading, and then if we go further out, the peaking rates was up at 500, 525 and above. If we go into next year, now it's peaking out at 475 to 500. Okay, so peaking rates is dropped by 25%, 25 basis points, over the last few weeks, last week or so in here. So we're looking at not as aggressive Fed has been coming through, and that along with positive earnings has sent stocks higher. However, obviously damaged by this yesterday. Alphabet, Microsoft lead mega cap sell-off, erasing 295 billion. Nasdaq futures dropped 1%. Well, it's more than 1% now as weak tech earnings fan slowdown fears. Elsewhere, though, Xi's vow, world dominance by 25, sends chill through markets. President vowed to boost China's international influence. His COVID, tech, and Taiwan policies have cast doubt on plan. And then in the UK, we've had this morning announced that we're due to have this financial statement, on the October 31st on Monday, Halloween. It's been delayed till November the 17th to give them time. Obviously, we had a new prime minister, a new government coming in. Doesn't give them a lot of time, only gives them 5 days to get that together. So they've bought themselves some more time, are calling it the right decisions. However, the markets didn't take that particularly well. And if we look at US unit delays plan on public finances, but UK bonds fall after government's delay. So bonds went down to lower in price. The gilt market down lower in price. I think the pound dropped as well on that news. What else we have? US mortgage rates continue to climb higher, up to 7.1%, their highest since 01, and covered here as well. US 30-year mortgage rates top 7%, highest since 01, picked up there as well. And if we look at where we are overnight, so European bourses kind of mixed. We're actually up on the DAX in here, unchanged on the French index, the CAC. The FTSE slightly down. But remember, we didn't get all of the upside. Remember, we got the late rally in the US and then the sell-off, okay? And these indexes equally not as prone to tech, okay? They do have some tech in there, but not as prone to the tech influence as the NASDAQ, certainly. And then even to an extent, the S&P is kind of fairly tech heavy to an extent. It's made up of those big tech companies, 2 of which reported last night and dragged not only the NASDAQ down, but the S&P lower. So the European bourses, the European indexes are a little bit immune to that, but nevertheless slightly lower in here, although say the DAX is actually up in here this morning. And if we look at where we are, so even though we added 1% yesterday, we were up on NASDAQ and S&P as well. We're down. The Dow's actually pretty much unchanged. Again, slightly protected from the tech, only slightly. But then you look at the S&P down 2/3 and the NASDAQ's down nearly 2% in here this morning. So let's take a look at the charts and what damage it's done. Well, if you look at the S&P in here, let's pop this out. You'd say that the big statement, right? We went right up on what's the day? Yesterday, Tuesday, Monday. So on Monday, we went right up, and we flagged this in yesterday's report. We went up and just poked above these peaks in here. These peaks up here were at 38. This peak at 38.20, and we got up to like 22 on Monday, and then just stalled there. And I also flagged this level here. 38.33. So the 38.20 to 33 area were important levels to me, and the market went up to 22 and then fell. But then yesterday we were on the call and said looking for the punch up through that 22 and 33 area. We got the punch up through there. It was a really strong session. A very bullish statement in here, and then after hours, obviously we got the drop. But if you look here, just on the little candlestick, just on the daily, look, drop and then rebound already. So already trying to reject, some of the negativity. So there we are. There's the kind of the rally we had up to the resistance points. We got up to 22 initially, up to here. Then the market set back. This is where we came on the call yesterday, and then we got the impulsive move up on the cash market open. Here's the cash market open, and then followed through then into the close. And then there's the after hours sell off. Boom here. On the release of the Google and Microsoft data, and then continuing through the Asian session. But then through the European session, we've kind of ebbed back higher. So this, I think, if you look at the sell-off that we had, there's the rebound. If we look, put just like a fib on here. So here's yesterday's kind of solid rally, and you kind of held, just went under the 50%. So we gave back half of it on overnight, but held at the 61.8, And now if you look at then, so we held at the 61.8. So you're holding on to some of the positivity from yesterday's rally, first of all. Then if we look at what we've taken back on the fib on the way back up again, so we're up through 50%. We've got back half of last night's losses. The losses that we suffered on the S&P because of Google, because of Microsoft. We've got back over half of those, and we've got up close to twice now, gone up and fouled around the 61.8. That 61.8 comes in around 38.55. So up through 38.55 would then kind of neutralize. We held at the 61.8 of yesterday's rally on the way down, and now if we can take out the 61.8, 38.55, this looks a whole lot more promising. And obviously we've fouled there once already this morning, and then currently fading back from below there. We got up to what was it just now? 38.54, right? And that retracement at 38.55 and 38.5. Up through 38, 55, 56 area opens up upside back up to the highs for the S&P. Okay, for me, that's the trigger. On the downside, you can either put on this more accelerated trend line just from the overnight activity down through there and the recent swing low, really. So down through there, and the trend line is 35.75. Below 35.75 sets this up for more negative. Okay, so those are my kind of breakout levels: 55, 56, and really below 35 on the downside. A kind of very short-term, immediate breakout levels. Bigger levels are pretty much the high from last night, up at 74.25, and the overnight low, quite simply at 24.25. Okay, those are the wider breakout parameters. However, the Nasdaq more damaged, obviously, because it's about tech, right? So there we get the strong rally. Now, interestingly, there's that swing high, the one that we've taken out, and there's that failure high there. Okay, so these peaks up here are 729.75, and over here 796. Okay, and then yesterday we got to 734. So we just got above that peak there, but fell below that one there. Okay, this is what basically the S&P did on 2 days ago, on Monday. Got just above this one and fell below this one, and then obviously we've had a significant then failure overnight. So we fell back lower on the bell, and then if we go and step into the intraday chart, we'll see that. So there's the strong rally. There's the initial rebound. There's the market hovering overnight where we were yesterday. There's the impulsive rally on the cash market open. There's the late session positive close, and then boom, lower on the data, on the earnings data, and then drifting lower. Really interesting. Look at these lows in here. These were the lows where we were treading water overnight last night before we came on, right? We had these string of lows here. So low at 430.25, 440, 446.75, and then we've held here overnight this morning. We've held at 436.25. So holding in the vicinity of these 1, 2, 3 little lows before we then exploded on the cash market. We've held there and then been creeping back higher. So pretty much we gave back here. Remember on the S&P we gave back and we held at 61.8%. Well, we've given back everything. There's yesterday's gains, and there's the overnight sell-off. So we've given back all of the gains there. If we step back though to the gains from here, this is from from Monday. Okay, gains from Monday. If you look at the fib for that, sorry, wrong one. If we look at the fib for the gains from this week, we're kind of holding in the vicinity of the 50%. We've given back half of the gains and then rebounded. We've certainly rebounded from above the 61.8. Then if we take a look at what we've got back so far on the fibs, from the overnight sell-off, what we got back, well, we're back above the 38.2 and we're kind of stalled from below the 50%. I think it needs to get above that 50%. It needs to take back half of last night's losses. Okay, if it can do that, it looks bullish again. So on the upside, the overnight high we got to was 568.5. The 50% is coming in around 580.85. Okay, so above 11,580.85, then for me sets this up more bullish. If it takes out, then you got the little trend line that comes across from the overnight activity. If it takes out this, look, you can see it works well, it holds there. If it takes out this, if it takes out the recent low, more probably this low here, these lows over here. If it takes out 475, it starts looking a little wobbly again. Okay, so downside 11,475, initial trigger, and then the overnight low, and this low over here. Okay, so below 430.25 looks wobbly, even more wobbly. Down below these lows in here, below like 475 and then 430 looks more negative. Top side above the overnight high, we've got 568.5, and then you've got the 50% is around 580.85. Yeah, through there it looks more bullish. Okay, so those are the trigger points for me there. Let's take a quick nod to gold and oil. So gold, first of all. So underlying bullish recovery theme from this big day we had back on Friday. Bullish outside pattern, took out the previous 2 days highs. A little bit of a wobble 2 days ago on Tuesday, and then, on Monday. Yesterday then a strong rebound, and then up through the recent peaks in here. These peaks over here as well. So if we go to the 15-minute chart, you'll see this is going to look like a much better, actually I'm going to make it a 30-minute. and you see it looks like a much stronger basing pattern. You can see in here the market's kind of, I'm going to get rid of all this analysis actually. Okay, you can see in here, you've got this bottoming pattern in here, bigger bottoming pattern. But go zoom out to here. Okay, you got this bigger, it's almost like an inverse head and shoulders, right? You've got head here. I'm going to quickly draw this one on. Where are my shapes? Here we go. It's not that user friendly for this kind of stuff. I'll have to make that. So you've got like a head there. So all pain, you can't just duplicate these. And then we go for then shoulders over here, right? You got like a shoulder there. And then like another shoulder is built over here, okay? And then the neckline like would run across there, and you've just kind of broken through that neckline. You'd argue there's the neckline. Okay, and we're just pierced above there, back above that peak and that peak there, and then also now nudging at these peaks here. Okay, so bullish on gold for me. It takes out the current high again, the high over here. You know, we failed right at that high. I think we got high there, 1679 overnight. We've been to what? 1679.4. Yeah, so 1680 handle looks really bullish through the peaks here and here. The next set of levels are just above. High there, 88.9, and then 91. So up through 89, 91 area looks even more bullish for gold. So in here, this kind of inverse head and shoulders pattern in here, setting up a much more bullish outlook for gold. So yeah, definitely playing that on the long side. Take a look at oil. It's been in this sideways chop. We went to the bottom end of the range. We were advocated on the buy side yesterday. We've obviously had the rebound pushing towards the upside. Now, is this enough now to signal a bigger turning point? We've had multiple tests, 1, 2, 3 tests down there, and even the previous test over here. I think, yes, I'd have to stay long on here. I was happy to buy it when it got to the bottom end of this range in this vicinity here. We spoke about this yesterday, and we got the push back up to the top end of the range. Now we're trying to break out the top end of the range. Do I advocate selling it up here? No, because if I go back to the chart here, this looks like a stronger basing pattern being built, okay? And all the risk is higher. And also you got the big in rally here, and then this looks like the next swing to the upside. So for me, I wouldn't be opposing this. I think you go with this, and there's real risk back up to the recent high, up to like an 87 handle on oil potentially today. All right, I'm going to wrap it up there, guys. Wish you all a great trading day. Please do come on to the Trader Mind session. Remember, 10 a.m. Eastern, 11 a.m. Sorry, forget that. God. 10 a.m. Central, 11 a.m. Eastern, 4 o'clock UK, 5 o'clock Central European time. And so we're going to work it back. It must be 9 o'clock Mountain and 8 o'clock Pacific. Okay, so I hope to see you guys on the Trader Mind session. You know how to get to it. Okay, I'm just going to go back there quickly. Come in here, Trader Education, into the members area where you are now. Trader Education, drop down Trader Mind sessions in here, and you'll find us in there at those times. Okay, so please do come in. All right, guys, I'm going to say have a great trading day, and I'll hopefully see you all on the call again in a few hours' time.